everyone, welcome to another episode of the Pointing to You, Mr.
Five.
David.
Oh my goodness. Oh, it's the 5% Club. We're so excited to be here. New season, new little change the format up a little bit, but looking very, very much forward to this new season on the 5% Club.
You know it, trying to keep it fresh. I'd like to know what people think of our new little intro song. I think it's pretty jazzy, pretty cool in my opinion. Um, something to I was thinking about. I know you were thinking about it too, David. We're up here in what I like to call the frozen Northland of Ontario, Canada. I always tell my husband, tell my family, I'm like, oh yeah, we're in the frozen Northlands. But especially today, there was no snow. There was like barely any ice, kind of a thing. It's kind of a crazy winter, crazy post Christmas, I guess.
Yeah, for sure. Yeah, we're first week or so of January, where we are. We normally have at least 1 to 2 feet of snow on the ground. Everything's white and snow covered. I was talking to my wife about this too. Like usually, I've seen green Christmases in our neck of the woods here, but this year we had a white Christmas, and then shortly after Christmas, all the snow went away, and we had a plus 10 or 12 degrees for us Canadians that use the metric system up here. Some people were wearing shorts and all that craziness. And yes, so we were like day 10 now of like no snow, or day 12 of no snow. And anyways, it's mind blowing.
Reminds me of my Christmases. I grew up in Kansas, and we had cold Christmases with no snow. So this is pretty normal for me. Reminds me of my childhood.
There you go. A little, what, what are you, Western, mid central, what are you?
Midwest is what it's called.
Midwestern winter just for you. I ordered that in just because,
Oh,
you're such
thanks.
a special person.
You're a great business partner, David. All right. Let's go over the assignment, kind of the challenge that we gave everyone. Here at the 5% Club, we know that, you join the 5% Club by writing things down. So last episode, we challenged you all to, write down where and what is your business going to look like in the next year, 5 years, 10 years, things like that.
Absolutely. So what we want you to be putting down on that piece of paper is what is it that you want from your business? What does your income look like? What does the location look like? Where are you living? Are you still living in the same house, or are you in a bigger house, or are you even in a completely different country working your business remotely? This is what you need to know, where you're shooting for, so you know what goals and milestones to put in place to make sure you get there. And as Maria said, we're doing homework this season on the 5% Club. One of the main things about how you can join the 5% Club is you just start writing stuff down. Trying to move forward, and the best way to do that is actually put it on paper. Most entrepreneurs out there, they put it in their mind. They got this vision in their head. They're going, this is where I want to go, but they rarely get there. One of our famous sayings on here, if you don't know where you're going, any road will get you there. And that's exactly what we're talking about here. If you don't write this down, then you don't know where you're going. So then your business is going to kind of sway and blow depending on how the wind is going.
When
And then you realize, 3, 4 years down the road that you're exactly same spot and going, oh my goodness, what am I doing? I had started this business. I wanted to grow this business for this wonderful, whatever it is, revenue that you were looking for. And then you look down at your books and go, I'm making the same or less than I was 3 years ago. What's going on? It's because you don't have the plan, you don't have the milestones, so you know that you're going in the right direction. Right, Maria?
Right. So now that David's off his soapbox, in short, write something, write your goal down, write the plan down. If something strikes you in anything that we say, write it down. Your more likely to do something if you have it written down. I type everything out on my computer. I have it typed out right in front of me. And that way I know for sure I get it done. So if we highly encourage you to listen to past episodes. It has a bunch. We kind of deep dive into what we just said. But for this episode, we kind of wanted to cover about over one section of how to get to that 10-year goal of yours. And the number one thing that people sometimes don't think of that kind of makes your profit jump almost exponentially is cutting costs.
Exactly. Cutting costs is something that most people don't, I mean, they're aware of it. It's a common sense thing to do, but when they're sitting down there thinking, oh, I want to increase my profit. They usually think about, well, what can I do differently? Or, I just need to sell more product. But the interesting thing there is, like, if your cost of goods sold, or your COGS, COGS, the COGS, cost of goods sold, if that stays the same, then your profit is not going to increase. If you're selling a product for $100 and your cost of goods sold is $70, which means that your profit is $30. Now we're going to use this example throughout today's podcast. So if $30 is your profit on that sale, you can sell 100 and you'll make $3,000. If you sell 1,000, you make $30,000. You're not increasing your profit per se. Yes, you're bringing more profit in, but you're not increasing the profit margin. And that's really what you want to look at. As a successful business, you want to make sure that you continually look on, how do I increase my profit margin? And some of the easy ways to do it right off the bat is, again, you look at your cost of goods sold. What is it that you're buying, or what is it that it takes for you to sell that good or service? Do you need to be talking to your suppliers, your current suppliers? Are you able to go back to them and say, you know what, I've been buying from you for years. Can we negotiate a better price? Or maybe even it's better terms. You know what? Instead of paying in 15 days, maybe you're paying in 30 days or 60 days. Apple out there, they have this incredible rule out there. I'm not quite sure how they get away with it, but they don't pay any bills for 90 days. So everyone that is selling to them understand that they're not going to pay their bill for 90 days. They play it absolutely every time in 90 days, but that means that they have 3 months essentially of that working capital before they need to pay off their bills. So look at that. Or you can look at, well, you know what level do I need to be? Talk to your suppliers again and say, so what level do I need to be able to get a price break on the product that I'm buying from you? Again, negotiate with them. And if that's not working, then do you need to be changing suppliers? Do you need to look at a different type of supplier? Do you need to look at 2 different suppliers? Perhaps you need to break up where you're buying your products from. That type of stuff is really what you need to be looking at, because cost of goods sold is the main thing you need to look at. So if you're looking at $30 profit, then in that $100 sale, then you wonder, well, if I just change the supplier or renegotiate, now you could be making $32 or $33 profit per sale. And what's interesting about that $3, even if it is only $3, goes right to your bottom line. There's nothing else that needs to come out of that. So that is one way that you can increase your profit immediately.
Yeah, you can think of it as like a sift or a strainer, The smaller the holes, the less the money is going to flow through. The larger the holes, the more flexibility you have, the more of the profit is going to flow through. And I know like most people, when you say cost of goods sold, you think of physical products. So, are you selling dog toys? Are you selling cookies? Physical things that you can buy and sell. But this also can be with, like David said, if you're in the service industry. So if you're, a professional, a coach, an accountant, an IT person, figure out like what things can you connect directly to one client. So for example, I'm an accountant, I do bookkeeping for clients. Well, I pay software for each of my bookkeeping clients. So I can connect that directly to each individual client. So my bookkeeping software subscription for them is a cost of goods sold. So figure out how much can I connect directly to what I am selling or what income, what revenue I am generating. So the next kind of item, it kind of also goes into what I was just saying is, your fixed costs. What are things that don't change either every single month or maybe annually or quarterly, depending on how you pay things. So some of those fixed costs could be, rent. You have a warehouse, you have a storefront that you have to pay. Even if you work from home, the rent on your home or your mortgage interest, mortgage insurance, things like that. What about the internet in your home if you have to work online, like most of us have been doing for the past couple of years? Those normally are the same rate month to month. Even if you pay for insurance on an annual basis, you can still break that down into monthly expenses.
Right. So what, just like we were talking about with the cost of goods sold, the COGS, you need to do a deep dive on what your fixed costs are. A lot of us, we're pretty loyal slash lazy when it comes to your internet packages or your cell phone packages or whatever it is that you're paying for monthly. What you need to do is take a look at that and say, okay, should I be looking at different providers, or can I negotiate with my current cell phone provider to get a loyalty break in the cost, that type of stuff? Because again, like $5 here, $10 there, that all adds up. And that again goes straight to your bottom line. Because every dollar that you save goes to the bottom line. When you think about increasing your price, I mean, that's another way of looking at how you can increase your profits. But for example, if you just increase your price by 10%, you're not getting a 10% increase in your profit margin because there's still the cost of goods sold. But if you save a dollar, you actually earn, and that entire dollar goes straight to your bottom line or your profit. So every dollar you save, and that's ongoing, that's every month and every year. And you got to think about it too, like if you end up saving $100 a month just on renegotiating your internet bill and your cell phone bill, and maybe you put your insurance in there, maybe you're selling maybe maybe you save $200 at the end of the day. That's a $2,400 profit increase on a yearly basis, right? So that's a pretty significant amount when you look at it. I think we used to talk about this in season one, but we'll talk in bring it up again. What we want to be looking at is percentages. Your numbers, if you want to be a successful business, I'm talking to you right now, deep down, a lot of us, again, we're in our head, we're kind of just using nothing written down, not looking at the numbers. But if you want to be a successful business, you really have to look at numbers. You have to look at percentages and you have to understand them. You don't need to be able to produce a profit and loss statement. You just have to be able to read it. But you also have to know the logical common sense about, well, if I save a dollar or a dollar on my phone bill, that dollar goes straight to my profit margin. So what else can I save? Where else can I cut costs that will go directly to my bottom line? For those of you out there that are just starting your business, same thing applies here. Perhaps a lot of us, the cell phone is something that we had before we started the business. Is it time to renegotiate right off the bat? Or if you're just starting to look at insurance, business insurance, if you're starting to look at rent, or if you want to get a location, well, maybe you need to look at renting or sharing space with somebody. Do you actually need to go out there and get a 1,000 square foot unit for yourself? Or can you get away with maybe just renting an office on a monthly basis? At probably 25 to 30% the cost of renting an entire building or entire unit. You need to really be looking at cost savings from the get-go. If you want to be successful, you really have to know your numbers. You have to know that the profit margin is key. It isn't how much sales you do. You could do there's companies that do $1 million in sales, but if it costs them $950,000 to make that $1 million, the profit's only $50,000. And there's lots of businesses out there that are making even just $200,000, and they're actually making $100,000 profit because they're good at their costs. They have a good handle on their costs. So I would rather own a business that, I know we're talking simplicity here, but I'd rather own a business that's $200,000 that's making $100,000 profit than owning a $1 million business or sales. A business does
Tongue
a
twister.
million $1 million in sales, but only makes $50,000. There's so much headache and stress involved in the $1 million business. So again, I'm going off on on a rabbit hole here, and it really isn't about the sales. It's really about the profit, because the better profit margin that you can develop, the bigger the business gets, the more money you actually make.
And everyone likes to have more money at the end of the day. Something I kind of want to emphasize about this section about fixed costs is that this is completely separate from what we like to call variable costs, or things that change could be from day to day and month to month. So your social media posting, if you post this month, you don't necessarily have to post and pay the same amount next month. That is a variable cost. Whereas your rent or your phone, which is the same going from month to month, it never changes. It's fixed. So what we want you to focus on are those fixed costs, those things that don't necessarily change from month to month, and see how you can, like we said with the COGS, negotiate with those different vendors or suppliers and see if you can get those discounts, or like we said, see if you can maybe pay and, change it from 15 days to 30 days to 60 days or whatever it is.
Well, excellent point there, Maria. And what I want to throw out there as well is, again, it's the numbers. Know it. So if you're spending $300, and you need to be tracking this, if you're spending $300 on for argument's sake, on a Facebook ad, and you keep track on how the leads are coming in, and then you, for example, let's say you're spending $100 for simplicity a month, and you get 10 leads in. That means it's costing you $10 per lead. But if you're only converting one of those leads into a customer, it's actually costing you $100 to bring in that one customer. So then you need to know those numbers as you move forward, because if you change it up, right? Like if that ad is only bringing in 10 leads, getting one customer, well, what do you need to change in your ads to up that to perhaps it's 13 leads that are coming in, and maybe you're closing 2 people on the 13. That's what you need to be looking at. You need to keep track of the numbers and know the percentages, because then you're looking at, well, if I'm closing 2 people on the $100, now it's only costing me $50 to acquire that new customer, as opposed to the $100 in the previous example. So those are things that you need to keep track of. Again, I'm going to be harping on this all season this year. If you really want to be a legitimate, successful business, you need to know your numbers. You need to keep track of them, and you need to know where you're going.
For sure, for sure. Going on to the next thing now, when it comes to cutting costs, something that people might not think of, especially if you're a new business, and I most definitely was guilty of this when I started my first business, it's something I also learned just being a business partner with David, is to stop discounting. Sometimes as new business owners, we just want people to like us because if they like us, they'll give us business, but we don't necessarily have to kind of hurt ourselves to do that. So we need to stop discounting. Something that I learned is that how many times do you see businesses giving just a 10% discount? 10% doesn't seem that big, but do people really give that out all the time? No, normally it's much larger. It could be 25%, 50% at the end of the year, especially. So you need to stop discounting, because every percentage that you take off of your revenue is taking out of your bottom line.
Right, that's an excellent point there. So definitely, what you want to do instead of discounting is add more value to the product or service that you're offering. That way, the customer perceives or understands that they're getting more value. One of the things that we do, especially in Canada and generally North America, is that we, as small businesses, do a poor job of showing value, the value of the product or the service. Though, of course, if it's just a simple commodity product like a ream of paper, it's very difficult to show value when two companies are selling the same ream of paper. One is selling it for 50 cents cheaper than the other. You're going to go, well, I'm going to buy one from the other. Well, perhaps what you can do instead of that is you could sell the ream of paper, but maybe you go, well, you know what? If you sign up for a ream of paper a month program, it'll cost you 50 cents more, but we will actually ship it to you each month on the same day. You don't even have to remember to call us or email us, right? There's other ways to add value into a product, even if it's a commodity product. But we will definitely cover that at a different day. But what I want to dig deep on here right now is the idea of the discount. A lot of people are thinking, well, at a 10% discount, that doesn't really mean too much. But if you've been in business for a while, and we're going to go back to that $100 product that you sell. So your COGS on that, the cost of goods sold, is $70. So it means, again, it costs you $70 to make that product. You sell it for $100, so that means that your profit is $30. So if you were then to sell 100 products, you will make a $3,000 profit. But now if you discount that by even just that 10%, you're now selling it for $90, which means that your cost of goods didn't go down 10%. Your cost of goods stayed hard at the $70. So now your profit is only $20 instead of the $30. So what you end up doing is you're going to have to sell half as much again. So you'd have to sell 150 units just to get back to your $3,000 profit. So is that really worth it? Is it, do you think you can sell more than 50% more? Likely not. So what you want to do is stay at your 100%. And what is it that you can add value to it? And if you add enough value to it, you can increase that price from $100 to $110. But that whole increasing price will be a different podcast altogether. But the key for you right now is I want you to understand that if you discount that even by 10%, you could, depending on what it is, end up having to sell 50% more product just to get back to the same profit margin as before.
Yeah, it's kind of crazy when you see it out in numbers. And we'll on the podcast, we'll kind of link to an image where you can visualize it. And if you're watching the video, we'll have it up on the screen. But it's crazy on how much the number difference is. It's pretty drastic. And that's just for a 10% discount. That's for a really small discount. And if you think of all the many customers that you have, and some of them might request a higher discount, that's even more products you have to sell to make up for just that one customer. So it's stop discounting. It's kind of the nutshell version of that.
Yes, that's one of the secrets that you definitely should be aware of. All right, so the homework for this episode. Sorry, folks. I know,
Back to
you thought
school.
you put school far behind you. But what I want to do again is, Marie and I, what we want to do is we want to help, educate, and we want to help mentor and coach businesses that are doing okay, but we want to help them to get to exceed their wildest dreams is really what we're after here. So that's why we're going to ask you. And if you really want to, if you just want to listen and keep going on, that's all fine. But if you really want to take your business to the next level, then you need to do the homework talking about. So what I want you to do is I want you to grab whatever MasterCard, Visa, American Express statements that you use for your business on a regular basis. I need you to put it out in front of you. I need you to audit them. Take a good hard look. Is there any subscriptions? Are there any memberships to websites or magazines, if you're still getting magazines, or clubs or whatever it is? Any of those that you're not using anymore, look at them. Audit them and get rid of them. Look, and then take a deeper look at your rent. Is it time to look for a different space? Are you able to negotiate with your suppliers? Are you able to negotiate with your cell phone, internet providers, and all that fun stuff? You need to really take a hard look. And this isn't something you do once. This is something you should be doing every year. January would be a good time of the year to do it. It's a new year, look at it, see if anything's increased, and that type of stuff. So your homework, go through. I love to see you have some statements in front of you with some highlights on them with a nice highlighter to look at the items that you're going to remove as quickly as possible.
Yeah. And kind of something to go along with that. Like I'm 100% a technical person. I can easily download my bank statements onto my computer and do that. But it is so much different having the physical statements in front of you and using either a pencil or an actual highlighter, because then you're able to, kind of feel the numbers, feel those expenses a little bit more than if it was just on a screen. So I highly recommend you actually print out your statements if possible. And remember, everyone, if you don't know where you're going, then any road will take you there. If you don't know the purpose of writing down and highlighting those expenses, well, then, what are you doing it for? You're doing it because you want your business to be better. You want to grow your business. You want to have your business more profitable, and you want to have that time and financial freedom that you had when you first started the business. And so we're here to help you do that. We're kind of your kick in the pants, as it were, to help you actually reach that goal.
So we want to help you create the business that you first dreamt of, like why you started the business. That is the business we want to help you build. So continue to listen, send us any questions, any comments, tell us whether you like our, what we're doing, or if you don't like it, though, any feedback.
Let us know.
We want to grow as well. As a podcast, and we want to be here for you. So if you have anything, please reach out in any format that you want.
Yeah. Thank you, everyone, for listening and watching, and we will see you in the next episode. Bye.